Good day everyone. The Fed spoke yesterday, and stocks sold off after the Fed's Jerome Powell took the mic. The Russell 2000 retreated 1.38% to 13-month lows. The Dow dropped 0.38%, and the S&P 500 sank 0.15%. The Nasdaq was the only gainer. Today it affected all stock market went down from 2% to 10% to each individual stock. Catastrophic stock market crash isn't over. Here's how much worse it could get as a week-long sell-off that's pushed major indexes down to the brink of bear market territory intensifies. Investment banks are warning clients the worst may be yet to come, with some experts warning that the S&P 500 could plunge as much as 11% more if corporate earnings continue to disappoint as the Federal Reserve begins raising interest rates. There are few reasons the stock market could crash in 2022 since the benchmark S&P 500 SNP index GSPC bottomed out in March 2020. Investors have been treated to historic gains. It took less than 17 months for the widely followed index to double from its closing low during the pandemic. Further, the S&P 500 gained 27% last year, which is well over double its average annual total return of 11%, including dividends, since 1980. But if history has demonstrated anything, it's that volatility, crashes, and corrections are a normal part of the investing cycle, and the price of admission to what's arguably the greatest wealth creator on the planet. In 2022, we may well witness a stock market crash, and one of the following few factors could be the catalyst that causes it. Number 1, the spread of new COVID-19 variants. The unpredictability of the spread and virulence of new COVID-19 strains means a return to normal is still potentially a ways off. Number 2, historically high inflation in a growing economy. Moderate levels of inflation, say 2%, are perfectly normal. A growing business should have modest pricing power. However, the 6.8% increase in the Consumer Price Index for all urban consumers, CPIU, in November represented a 39-year high in the United States. Number 3, a hawkish feed. A third reason the stock market could crash in 2022 is the Fed turning hawkish. Number 4, China's tech crackdown tightens. For each of the past 2 years, China has been a headwind for Wall Street. The second largest economy in the world by gross domestic product, entered into a trade war with the U.S. 2 years ago. Meanwhile, concerns were raised last year when regulators began cracking down on the nation's biggest tech stocks. While it's tough to say what 2022 will have in store for the world's number 2 economy, there's been no indication of regulators loosening their hold on China's leading innovators. Weakness in key China stocks, as well as potentially negative impacts on innovation and supply chains, threaten U.S. equities. However, this year will be bad for the market, but if the investors will stay strong, will be better year to come and next year. Thank you for watching my video. Hope you all stay safe. Oh, don't forget to subscribe.